So, as it relates to the audit, the period of time that was audited was our most recently completed fiscal year. So that ran from July 1st of 2021, last summer, through June 30th of 2022. I will note that we're here a month earlier than we were last year, so we did push to get the audit completed a little faster this time around. Sometimes we do November board, just depending on what we've got going on, but we got it done very efficiently this year because the team knew each other and knew what to do. And again, the name of the report has been evolving based on GFOA and other accounting standard guidance that has come out. The industry has landed on an acronym, Annual Comprehensive Financial Report, ACFR, ACFR. It's not all that easy on the tongue, but it will do. And the industry has finally decided and formalized. So all local units of government and utilities like us will have ACFRs this year. And again, the team has been in place for a while. And we did do this year's audit primarily virtually. Like many business endeavors, we found during the pandemic that there were a lot of things that we could do more efficiently from a remote location than we thought. So there were some in-person elements of the audit. I believe the VRS and payroll pieces, they came on site to actually examine documents, but some of the basic stuff, we end up just scanning those documents and uploading them to a website anyways. So we used a tool like that this year that was really, really efficient and helped us all stay on schedule. Again, it's the fifth year for this team, and it's the third year that we've done federal single audit. So that is something that not everyone has to do. Each fiscal year, whether or not we have to do it depends on how much federal funding we spend. And in this most recently completed fiscal year, we had 3 pieces that counted as federal funding. And we'll go into more detail about this in a few slides. But the first is one of our bond issuances through the Clean Water Revolving Loan Fund. And the other 2 relate to funding we got from the federal or state pass-through from the government to give to customers who had trouble paying their bills. So we got CARES and ARPA money, little pieces from each of those programs to give to our customers for bill relief. So those 3 programs together were what triggered the federal single audit this year. And for a 7th year in a row, not to steal Jennifer's thunder, but we did get a clean opinion, so we're very proud of that. You'll hear more about that in a moment. YHB did not identify any deficiencies in internal control or material weaknesses or anything along those lines. And the single audit was also successful and indicated that in all 3 of those programs we're using that money for what we were supposed to use it for and following the many, many, many federal rules you have to follow when you use federal funding. So we've learned a lot about that in the past 3 years, and that really positions us well because our WIFI loan also carries a single audit requirement. So when we begin drawing that loan in a couple of years, we'll have to conform to all of that. So this is all just good experience for the organization for the future. Any questions on the summary before I turn it over to Jennifer?
So the ACFR, does that only apply to utilities or to any
public?
Okay.
Right, cities, counties?
Yeah, you don't have to do an annual comprehensive report, but if you do, it's no longer called a CAFR, it's going to the ACFR.
Okay.
But you know, the prior AlexRenew, they realized 2 languages is derisive and racially offensive.
Yes.
So much for due diligence.
You need to change around. Well, it's part of everybody rethinking, looking at putting the mirror up to themselves and saying, is everything okay or not?
Yeah.
And this is one of the things that came to light. And so the Government Finance Officers Association led the charge and said, we need to change the name of this. And came up with the best name they could, although the acronym's a bit unmouth.
Not unusual in this region, to say the least.
Yeah.
I'm sure the cities is titled the same this year. Great. Well, I will turn it over to Jennifer and let her tell you all about her process and the results.
Okay. Thank you. Thank you to the board members and committee members for allowing us to be of service to you. We do work for the board, for the committees. We work with management. I'd also like to thank Karen, Christine, Adora, Jeff, and a variety of other people behind the scenes who helped make the audit successful. It's, as Christine mentioned, I think we really found the groove. The first year of an auditor transition is very hard because we don't know each other. As those years go on, it gets a little bit better. We know what reports are generated, what you call things, and how what type of information is available for the process. As Christine mentioned, we also did it in a remote fashion, which not all remote audits are successful, but the team did a really wonderful job in a remote fashion. Again, we still came on site to do a certain number of procedures, a lot surrounding VRS, HR, payroll, sensitive information. We want to look at actual documents in person rather than scans or sending information. Everything through our portal is secure, but we rather see those documents in person. So I think I'm going to go in order of the documents that are in the board package. But if for any reason you're not seeing what I'm talking about, let me know and I'll pivot from there. I believe the first thing you have is the independent auditor's report. So this looks a little bit different. All in all, the audit was very successful. We have a clean, unmodified opinion on the ACFR, on the basic financial statements. But this opinion looks a little bit different than it did last year. And that is just a change in our audit standards and our reporting standards. So I'm going to go through the sections with you in a little detail just because it is brand new. We haven't changed our opinions for 20 plus years. So this is the most significant change you're going to see in an opinion in the bulk of my career. The opinion now starts with the actual opinion. So when we open the letter, if the reader gets no further than the first paragraph, they're going to know if it's a clean opinion or if it's not. And then beyond that, if they stop reading, they stop reading. But at least they know what the outcome is. So we start with the opinion. It says that we've audited the entity and the business-like type activities and fiduciary activity of the entity, and that it is a clean opinion. The basis for opinion, this is the section where we tell the reader what standards, what guides, what different things we used that our audit is in accordance with. So you have government auditing standards, you have the APA's authorities, boards, and commission information. So that shows you what our opinion was based on. Then we go into the responsibilities of management. Ultimately, the ACFR, the basic financial statements, the financial reporting of the entity, it is the responsibility of management. It is not the responsibility of the auditors. So that's what this paragraph tells the reader. Then when you flip to the next page, you get into the auditor's responsibility. This is an expanded version of what you would have seen in an opinion before. The bullet points there, I think, are the most important piece of it. This lets you and the reader know our responsibility is to exercise professional judgment and maintain skepticism in the audit process. We do that by rotating what we're testing and how we're testing, the types and the details of testing that we do through the process. Identify and assess the risk of material misstatement of the financial statements, whether that would be maybe due to fraud or error within the financials. We do obtain an understanding of internal control for us to design our audit process. We do not do an internal control audit. We do not issue an opinion on your internal controls, but we do assess them to see are they working properly to help minimize the risk of a misstatement in the financial statements. We do look at the appropriateness of accounting policies and the reasonableness of the accounting estimates. We'll look at this a little bit further in the presentation, but there are estimates within the ACFR, and we look at those to make sure that management has assessed all of the known or knowable information available to them at that time to make it a solid estimate. And then ultimately, we do conclude on whether or not the entity can continue on over the next year as a going concern, that there's not an issue with them, with the organization folding in the next 3 months, 6 months, 9 months. At the bottom part of page 2, the required supplementary information, there is RSI within the ACFR, the MD&A, the required supplemental information because of the VRS, the pension and OPEB sections. This just explains to the reader, if they get this far, that this information, we apply limited procedures on it. It's not the same level of detail that we do with the basic financial statements. And then when you turn over to the next page, in your ACFR, there is also other information. This is the intro section, the transmittal letter, the statistical section, all about the local environment and information. Those are even a lower level. They're not required supplementary information, it's other information. We do look at it to make sure it's consistent with everything we've audited, but we don't audit that information either. And then finally, the report on government required by government auditing standards, we'll go into that in a few more pages. Any questions on the opinion? Okay. I think the next thing that you have in your package is the single audit report package. Okay, perfect. On page 1 of this is our auditor's report on internal control over financial reporting. Again, we look at the internal controls of the organization to assess, do you have processes and controls in place to prevent or detect fraud or errors from happening? If we had significant deficiencies or material weaknesses identified in our process in the control environment, they would be detailed in this report. As Christine mentioned, we do not have any recommendations, internal material weaknesses or significant deficiencies, findings or recommendations. So this is a clean, unmodified report on internal control or financial reporting. The whole first page really just talks about it defines the different levels of findings or recommendations, but ultimately we don't have any details in there. On page 3, the next report, this is our report on the major programs. As Christine mentioned, there were 3 different funding sources of federal monies, both direct and pass-through monies. We look at those for compliance. We look to make sure that whether it's a grant agreement, a loan agreement, if it's an agreement between the city or county or something, there's some layer of contract or agreement, that you're meeting those standards. You know, whatever you signed, when you accepted the money and said, I will do these things, we look at those compliance pieces to make sure that the authority is doing them. Again, this is a clean, unmodified report. If you turn to page 6 of this, there is a table. Yes.
Jennifer, just a question on the deficiencies in internal controls. I understand there are significant deficiencies and material weakness. Is there anything in the new standards, is there a lighter deficiency or are there only 2?
Generally 3. A material weakness is the most significant.
None of those.
None of those. You'll have a significant deficiency, which could be 1 or more control deficiencies that together equate to that middle level. And then you can have a control deficiency, which is the lowest level of deficiency within the environment.
And you found none of those?
We found none of those as well.
In all 3 categories.
Correct.
Nicely done, thank you.
Another thing I wanted to point out to the group is that 2 of those federal funding sources were passed through the city. So not only do they put compliance requirements on us, but they put them on the city as well. So we've worked with them to make sure that we meet all of the reporting requirements. So it's just, I thought that was a nice partnership between us and the city in terms of making sure we followed all the rules with that money, because it was kind of unusual to do it that way.
Which were those 2?
CARES and ARPA both came through the city as our fiscal agent.
So that was the
Bill relief.
Okay.
Yeah.
And I think from my perspective of the control environment, when we started with the organization a few years ago, we did identify deficiencies in processes and controls. And I think Karen and the management team has really taken pride in correcting those over time and making sure that as changes occur, they address those. Christine and Adore are great to reach out, I think, to both of us when changes are happening to ask, this is what we're doing, what's a good control, what's a good process to put in place for the changes that they're making. So I think that goes into why at this point we have no recommendations or findings in the control environment.
So you've been part of the process the entire year as far as consultation?
Yes. We don't make decisions for the authority,
Okay.
but we're open and they bounce ideas. We talk through things. We brainstorm options for putting controls in place or making changes when changes occur. So I
As
think
one
being
example,
part
during the
of
pandemic, we said, hey, we're all working from home. The approvals are working a little differently. Let's put it on paper. Let's make sure it works. And then when the pandemic was over and we came back, we also got back on the phone and said, hey, we don't want to go back to doing it the old way. It's more efficient this way, but we want to make sure that works in the new world. Those types of conversations.
Thank you.
You're welcome.
And it also suggests that we have documented procedures in place.
Absolutely, you do.
Very good, thank you.
On page 6 of this document, the table, this is the CFA, the Schedule of Federal Awards. You have 3 line items there. As Christine mentioned, the top 2 are COVID funding to help, bill relief to the customers directly. And then the third one is the revolving funds. About $850,000 was spent in this past fiscal year. So all in all, the federal awards amount of just over $1.1 million. The next page is the notes to the CFA. These are 4 very basic notes that are required as part of the reporting package. The one that is a little bit different from the norm is note 3. You are required to disclose the loan balance. It is a loan, so we were required to disclose that loan balance there, and it was $4.8 million at June 30th.
I did not understand note 4, indirect cost rate. Just tried getting my head around it. I couldn't understand it. Can you explain it in
Yes.
layman ask?
So the indirect cost rate, entities generally have the ability to use a de minimis rate, which is 10%, or they can negotiate an indirect cost rate with.
Wait a second. Do that one again.
You can elect the de minimis rate, which is a standard 10%.
10% for what?
It's built into the contracts, 10% of whatever, if it's payroll hours, if it's labor, direct labor, whatever the contract might be. It's the overhead component.
Got it.
So organizations can use this standard 10% rate, or they can negotiate and maybe have audited a negotiated indirect cost rate, which is higher than 10%. The agreements that you have, you don't really use any indirect cost rate, but you are required to disclose not that you are or are not, or you do or do not have a cost rate, but that you are not using the de minimis rate. So that's why that disclosure is there.
Okay, so I understand like universities charge a pretty high one as far as an overhead rate.
That might be more in your wheelhouse than mine.
Usually, I mean, not necessarily universities, but like educational facilities, the state will have a negotiated rate,
Okay.
and that's approved. Yes, it would be higher, but these kind of entities where they're construction, like most contracts, it doesn't really come into play, but it's a required disclosure. It has to be there.
Okay.
That's why it's there.
That's helpful, thank you.
Page 8 of the document, this is the schedule of finding and question cost. The top part, the very top third of the page or quarter of the page, this relates to the financial statements. So it asks if, what type of opinion was issued, it's unmodified. If there were material weaknesses or significant deficiencies, you have none, so these are listed as no and none reported. If there were, they would be included here as well. The next section is specifically related to the federal awards. So we're getting just into these 3 funding sources. Were there material weaknesses or significant deficiencies related just to these 3 programs? We have no and none here as well. And then we also have that we've issued an unmodified clean opinion on the federal awards. So this is just laying out for the reader the different types of opinions and findings all in one spot. We identify the major programs that we tested in the process. below that, the dollar threshold is standard at $750. AlexRenew did qualify as a low-risk auditee this year, which just makes the audit a little bit less painful for management than what it was the first 2 years. So that criteria, you have to meet certain thresholds of having prior timely compliance audits to qualify as a low-risk auditee. And now AlexRenew has done that, so as long as anytime there is a need for the compliance audit going forward, as long as you continue to have that clean, timely compliance audit done, you will continue to qualify as a low-risk auditee.
So having that terminology put on AlexRenew, who cares? I mean, we care.
They care,
They
because
care.
it's the amount of
for
work
us.
that they have to do. Yes.
But does it affect, I guess, the bondholders? They'd be interested in that. Do they pay attention to that?
I don't know.
Yeah, okay.
I, as an auditor, as an accountant,
Yeah.
Well, technically, our bondholders are largely made up of the folks at the Clean Water Revolving Loan Fund, and they care because the single audit is partially triggered through their bonds. And the city cares too, because we heard from their internal auditor that they wanted to make sure we got a single audit so that that helps them support their compliance of
It
us.
does
And so it does.
Okay.
It does, but the last prior 2 years, you were a high-risk auditee at no fault to AlexRenew though. It was just
True.
because they didn't meet the requirements to have a single audit. So potentially, depending on how money comes through, you could not have one next year. You'd go back to high risk, but that's at no fault of the organization. That's out of their control because a single audit wasn't required.
The first year of single audit, you can't be.
Yeah, you basically have to have
can't
2
be low
million
risk.
years and then you get it, but as soon as you miss a year, then you go back as high risk. But it's not necessarily a negative on the authority.
Okay.
It's strictly the auditor has to test 40% instead of 20% of your federal awards. That's what it comes down to.
okay. So any other questions there on federal awards, single audit compliance? Before we move on? Okay. The next item in the package then is the Fairfax County allocation report. Unless I'm wrong, am I right? Okay. Here again, we have a clean opinion. We have no findings. The opinion letter looks very similar to what we walked through earlier. But when you turn to page 3, you have the actual schedule of the allocation of expenses between AlexRenew and Fairfax County. So we go through the process, once we complete the financial statement audit and we've become comfortable with all the total numbers and the amounts and the data and the testing, then we step a little bit lower into this Fairfax allocation report. And we do some additional testing to determine there are some costs within AlexRenew that are Alex-only costs, and there are some costs that are shared joint costs based on this allocation and the consumption, if you will. So then we look at that testing. We want to make sure that the information is flowing properly. There's certainly a process for how costs are captured and how they're allocated. So this statement, the schedule itself is produced by management, and then we've audited and tested the details of it to make sure that the allocation amounts are correct. Ultimately, when you come down to the bottom line, based on what Fairfax County was billed and paid throughout the year compared to the whole fiscal year of cost accumulation, there is an amount due to AlexRenew at June 30th of additional $133,000. And that has been booked as a receivable as of June 30th.
And that's the other way around from how it usually is. Typically at the end of the year, Fairfax gets a refund. But this year we actually underestimated the flow and they contributed slightly more flow than what we budgeted for. So they owe a little bit more money for that reason.
Okay.
And this is all because it's flow-based, and so you can't know, obviously, ahead of time what percentage of flows Fairfax will contribute. So we guess, we exchange payments based on that estimate, and then at the end, we true up on the operating budget.
Any questions there?
No.
Mr. Chairman, can I jump in?
Sure.
This is a very important part of our business, this relationship with Fairfax. So what this audit tells us is, one, that the 47.39% is accurate. And more importantly, it is accurately applied to expenses in the appropriate bucket. And the settle up was a tiny fraction of 1% to true it up, right?
Yep.
Which is impressive.
Yes. Now, again, like every audit process, this is based on a sampling approach. We do not test every transaction, every invoice that went through here. But based on our samples and our testing, we feel comfortable that this allocation is correct. The expenses that are Alex only and combined joint expenses, everything came through as it was reported in the general ledger. So yeah.
Could you just say a word or two about the sampling process? And I know that some of the sample transactions are in this document, but how big was the sample and what time span did it cover?
So the time span covers the entire fiscal year for both this report and all of our testing. I don't exactly remember the sample specifically to the Fairfax allocation. There are pieces of it that are dual purpose from other things we've tested through all the expenses. And then there are pieces specifically that are smaller dollar and specifically designed just to test for the allocation here. I certainly can get back to you as to what the actual sample was, but we look at the population as a whole and then make sure that we cover a certain percentage of cost, that anything that is untested in our population would not result in a material change in these numbers.
Good, thank you. Thank you, Jennifer.
Okay, and then I think the next report here you have is the VRS compliance report. This is an examination report. So what we do each year, we examine the census data that is provided to VRS that goes into the calculation for your pension liability or asset, yes. So we do this each year. The APA sets forth specific testing. You can see on page 2 here, there are 4 required audit procedures that we do in this process. We've documented the population size of each one of those items and then our sample size for the specific testing. In all 4 of these, we had no findings, or no issues, no recommendations from the results of the testing.
Okay. Question. The sample size, that's the number of billing units that you examined?
So on Appendix A, if you look at that top item here, the review of census data elements, the population size is actually the number of employees for the entire year.
Employees or?
That would be employees.
Oh, employees. I'm sorry, I was thinking. Okay.
Yep. Now that number can be different than just the people you have employed at any given point in time, because it's every person that stepped foot in here during the year.
Okay.
So there's 131 potential people from us to choose in one fiscal year. And we tested 37 of those 131 options.
I'm sorry, I put 1,000 after it. I thought you were looking at our billable units. Okay.
These are people.
These are,
All of this is people.
these are our people.
Yep.
Literally a headcount.
Okay.
The second piece there is eligibility of newly enrolled members. So during the year, AlexRenew had 34 new potential, candidates to the process that we looked at.
Okay.
And we tested 5 of those 40 to 34 to make sure that the information was captured and then reported to VRS properly. And then the bottom 2, this is actually how the data is transmitted from AlexRenew to the VRS. We check their monthly reports, and then there's system access. So of the monthly reports, we tested 4 of the 12. And then for the actual system access, we tested all 3. There were 3 individuals with access, and we tested all 3 of them. I think the last item that I have in the packet is our required communications from the conclusion of the audit process. Is that correct? A lot of these things, I'm gonna go through this sort of high level, and certainly if you have any questions, I'll be happy to answer questions. I think we've touched on a number of these things throughout the presentation. We've talked about some of the accounting policies and practices. There are management's responsibility for financial statements. There are some changes that, some new GASBs that took effect this year. But ultimately, I don't think any of them had any major impact on the ACFR. You'll see in here in a few pages, we've included a copy of the GASB standards that will be effective for the authority over the next 3 or 4 years. Your management team, Jeff, will continue to assess those as they come due to see the applicability of the standard to the authority, as well as, you know, what needs to be done to incorporate those changes into the report.
Do we have any sense, as Mr. Christine asked, do we have any sense whether or not any of these so far appear they're going to have an expense or a revenue impact, something that's?
We think that's unlikely. We debated that one a bit before we came up here. The only one that we thought about that could is there's a new standard coming about subscription-based information technology agreements. So a lot of our technology products we use now are SaaS or subscription-based. And those types of contracts next year, we're gonna be required to account for them in a certain way. But Jeff, the way you explained it, it will balance out on both sides
Yeah.
and not have any kind of.
On the balance sheet, it's basically gonna follow the leasing standard where you're gonna, instead of paying operating expense, you're gonna be recording an asset and a liability in year of implementation. And then now going forward, you know, you'll be paying down the debt and having interest expense instead of operating expense. So financial statements will look a little differently, but it's not gonna be an impact really to the bottom line.
Otherwise, no, there's no impacts.
A few of the things, we did not identify any unusual transactions in our testing. As I mentioned earlier, there are some accounting estimates, and a lot of those are, the significant ones are detailed in that section. Unbilled accounts receivable, the allowance for doubtful accounts, depreciation expense, and your net pension liability. Ultimately, that's an estimate based on a lot of actuarial data that changes year over year. We do look at that information that management accumulates to make these estimates, and we agree with their determination. They're reasonable, they're well documented. We have no concerns or issues with the estimates that management has produced in these financial statements this year. There were no uncorrected misstatements, so through the audit process, if there was anything that we identified that was not adjusted in the ACFR, we would disclose that to the committee, but we have none. There are a number of adjustments that were made during the process, and we've attached those so you can see them in their entirety. They're all what we call PBC, prepared by client. We ask for the trial balance early in the process before everything is finished and closed so that we can start our risk assessment and our planning process. While we're doing that, management is still closing the books for the year. So these adjustments are really the final closeout of a few key accounts that are taking place while we're doing our risk assessment. So we have no concerns or issues with these adjustments. It's just the timing of, we need the trial balance early so we can start the process, and they need time to close out the year end.
That's why they're all dated 6/30?
Yes, yep. These are not entries that should have been done earlier in the year. These are not things that are reoccurring monthly things. These are just the year-end close process.
Close process, yeah. Maybe some of these directly relate to the fact that it's accrual account. June 30th, maybe kind of a cash.
Well, and Fairfax drives it a bit too, because we have to get everything ticked and tied before we can loop back around and do the Fairfax allocation, so we'd have to enter that at the last minute anyways.
Mm-hmm.
The other part kind of relates to how we book our fixed assets in our system.
So you'll see a number of them relate specifically to fixed assets. A lot of things are captured in total in the expense side, and at year end, the different projects and things that are done, that are grouped together, all come over into fixed assets because they've been placed in service, or they come in as CIP because they're in process but not completed at year end. But during the year, they're all captured together so that they can be tracked. So these entries just relate to that. And then depreciation is calculated on that movement from expense to asset at that time. And then let's see what, those are all fixed assets. I think we have one on, the pension and OPEB. That information lags a little bit when you get the reports from the state so that those entries can be updated and booked, and that's gonna be at year end every year. And then the other entry is the Fairfax allocation. Once all the costs are final, then they can make that final calculation and that final adjustment. See if there's anything else. So the back page of the required communications, it goes through a couple other disclosures. We've had no disagreements with management over the application of policy or practice or anything, in the audit process overall. Aside from Jeff and MSL, we're not aware of any consultation that management had with other auditors or accountants throughout the fiscal year. No difficulties dealing with management. Internal control matters, we've talked about that at this point. We have no material weaknesses or significant deficiencies. And then the last thing that we attached to this for you to see as well is the management representation letter. This is what Karen and Christine sign at the back end of the process. I feel like it gets longer and longer every year.
Noticed that.
But these are the representations that the information that they've given to us has been, complete and accurate. There's some items in there about compliance, information about the information they provided to us in the process. So I think it's important for the committee and the board members to see these are the representation that the management team is making to us about the audit at the end of the process. Any questions there? I don't think that there's anything else I can cover. I think I've covered.
I remember when rep letters had like 25 lines.
Yes.
Now it's 70.
Nothing ever gets smaller.
I think the engagement letters are up to 12 to 14 pages, and the representation letter are just slightly behind that.
New incidents arise around the nation. They're like, oh, we didn't talk about that before. Let's add that. So make sure we've covered that base. So it's right. It's growing.
Yeah, it is amazing.
But any questions at all about the process or
It's great.
the reports?
I'm just amazed at the level of expenditure that we're going through right now with AlexRenew, that we've done a great job. I mean, that's a big mouthful that we've taken on.
And as the authority embarked on the process, we talked a lot about levels of signature, of authority, controls and processes. So there's a lot of things that we've talked about coming into the project that helped prevent any issues or findings throughout the process. And I think that just speaks to the management team wanting to do well by the control environment and the process to be prepared for a project this big.
And I take that, I assume out of all this that you have a pretty good relationship with our contractors as far as them working with you all.
We pay them quickly, I can tell you that.
Well, I mean, that's important. I mean, they do their billing and the billing is in accordance with what you want. And, okay, that's good.
Yep.
This is incredible. You think about how far this organization has come. I mean, I remember there were delays in getting reports out, and there were findings, not material, but there were findings. Now, with a budget that's at least 50% bigger than it used to be, and new federal programs we didn't have, and a financial report that is a month earlier than it was last year, and several months earlier than it was the previous year. How do we stay in shape? Okay, we're now at Olympic level performance, right? How do you stay in shape? What's your recommendation, sort of general broad strokes? How do we keep this level? Any advice? Just general advice to a board.
Don't take your foot off the gas in your oversight, in your appreciation for the control environment. Just because things are good, it doesn't mean that you back off. You know, there is a lot of change coming for this organization that I'm aware of, and maybe some that I'm not aware of at this point, that's coming in the next fiscal year. And as we've talked before, change equals risk to me. Change should equal risk to the organization. Every time you have a significant change within a process, a control, personnel, that all changes the dynamic of the organization and the structure, the risk assessment process. So when those changes happen, it's important for the management team to sit down and look at what could this possibly affect, how can it be affected, and how do we adjust for it. Change is inevitable, but it's important to make sure that your control environment responds quickly, timely, and appropriately for those changes that are taking place. So from a board and committee perspective, I think as you go through these next 12 months, as you see and feel changes happening in the organization, just make sure that management is addressing those and that you feel comfortable with the changes that are taking place.
Now, I know some organizations do internal control audits and they're incredibly invasive. Any idea on should we consider that or not?
I don't think I would personally recommend it at this point. If you had a lot of deficiencies and issues at this level, then I think it might be worthwhile to dig in and to make some corrections and to look further. But I'm not seeing that.
There's no evidence to
There's no evidence to support it's worth the cost.
And it is costly.
It is costly, correct.
Thank you.
You're welcome.
I agree that once you're at this peak performance, it's hard to stay.
Those are big shoes to fill. But I think in my experience with, I believe it's 5 audits, but it's been 5 audits. You know, we are further along now than we were 5 years ago. It's a different audit process. But I think it's just, part of it is the nature of how it works. We know what to ask for. We know what the organization's risk tolerance is. And we also know that management will reach out whenever they have questions or concerns, whether to us or to Jeff. And that is important to me because I know what's happening as it's happening, and I can help with any feedback or recommendations as it's happening, rather than find out about it 9 months later, and then we have something to undo, or we have findings that we need to present. So I think it's better to know what's happening, what's changing in the process real time than after the fact. So thank you.
Thank you.
Thank you for allowing us to be of service.
No, very pleased.
I have a question. It first shows up on page 25. It has to do with investment income, and it's in brackets, so it's a negative number. I know the numbers, all the numbers in the rest of this report were in good shape. We got surpluses. It's kind of underspent. All the kind of the nice things you like to see at the end of the year. This would appear, at least, to be kind of the opposite results. So maybe you talk a little bit about this, what appears to be investment income loss here where it originates from. This is Mark, is this interest, we're writing down some kind of investment note that we held that now because of interest rate increases is now not worth as much, and is that kind of on paper and not real, or is it real? So
I'm gonna let Adora answer this one,
Yeah, I
but
think-
your instincts are
Yeah,
right.
your instincts are right. I got a peek at the email you sent, and I think you actually answered the question. It's an on-paper adjustment because of the fluctuations in interest. And if you look at our balance sheet, and I don't think we've gotten there yet, you can see the investments actually went up. So it's not any write-down of any of our investment assets. We were at 24 million last year, and this year we're about 27.4 million. So that adjustment you see is what you said in your email.
this is then a snapshot on June 30th.
Exactly.
Some of the short-term paper that we own.
And it's almost all short-term
Investment.
treasury bonds.
Yeah, it's not anything
Raising
long-term.
rates went down a little bit, but we're holding those until maturity, so we'll get, we put $1 million in, we're gonna get $1 million back.
Yep.
We may get less than if we had decided earlier just to invest into some point in June and then go reinvest in something else, but that's hindsight, and it's every investor in the bond market is facing those kind of numbers. So, and if you looked now at where we are, is the number, we're gonna see it also a number next year potentially? Or
That's a good
right now,
question.
it's a snapshot that is also gonna be negative or
I
much.
think if rates stay elevated, it's possible we continue to see that dynamic, and I think that's very possible, but to your point, it's just on paper, mark to market, and we hold them to maturity.
Are we investing in securities that are shorter term?
They are very short term, like I think the average duration on the PFM portfolio is like 2 or 3 years.
2 or 3 years.
So I noticed that the policy allows go to 5.
Yeah.
Which is short term, is kind of long for short term.
Yeah, but it's a very bond-heavy investment portfolio, not a ton of stocks, so we're always gonna see that dynamic with interest rates, but we also have the benefit of having already borrowed for all of the stuff that we need, so that creates a very nice dynamic that at least we're not also paying high interest rates while we're seeing this.
That's true. Government bonds are now are far better than market that one. Any other questions?
I've got just a couple slides on the financial performance, and then we can go to any pages of the ACFR that folks like. I wanted to say thank you to Caitlin and her team for our lovely cover. It looks like Hazel the tunnel boring machine with the hands all over it, so always really appreciative of the comms team. And I guess just starting with achievements for the year, we've successfully managed 3 federal compliance programs. We've talked about that, but just again want to point out that doing that enables us access to very efficient capital funding and to free money for our customers. So jumping through those hoops is worth it and meant something to the organization and our future and our customers this year. Did want to mention that we received the Government Finance Officers Association Certificate of Excellence once again for last year's annual financial report, and of course we'll apply again this year, and as we always do, we'll take note of any minor comments they may have and address them, but we've had a long history of receiving that award. Got a lot of attractive financing vehicles in the mix, several bond issues we're working on, grant facilities, we got that short-term line of credit, so we have a lot of really efficient financing tools at our fingertips to help support construction and keep all of this smooth. And then of course our trustee legal and contractual requirements, the board adopted financial policies have served us well for many, many years, as you know. And as it relates to the 2 main board financial policies, the first is debt service coverage. You may recall that the policy minimum is 1.5 times, and we were at about 2.5 times, so in excess of budgeted coverage, and that was because revenues came in quite a bit stronger than we expected, and we also did not need to draw debt as quickly as we expected because we got that second $25 million grant in this fiscal year. I also wanted to point out that unrestricted cash was quite high at the end of the year, over 500 days. I know that sounds like a lot and it may sound like too much, but it's because we just drew that $25 million grant right before June 30th. And so we got this $20 million infusion right at the end of the year. And so that is why the cash position is so high, and that will dwindle quickly as we pick up construction again. So I've almost never seen it that high since I've been here. So it's notably high, but there's a reason for it, and it's gonna even out here in the coming months.
If you take out those one-time monies, how many days do we have? So if you say that's an anomaly.
I've never seen us have less than 365, less than a year's cash. I've never seen us get anywhere close to the policy minimum of 120 days, and I wouldn't recommend that we try to do that while under such major construction. I think you all looked at raising it at some point, but the idea was keep the policy low and just target a little higher if that's what you want to do, and don't actually change the policy.
I think it's called windage.
Yep. In terms of operating results, remember that we did have a rate adjustment that went into effect last year, about 6.9%. That, in combination with just strong demand for water across the service area, resulted in revenues of just over $50.6 million. I still think we're kind of seeing this effect of there's more people working from home, and just as a bedroom community to DC, there's just a lot of people flushing and washing in the city. So the treatment, it was 13 billion gallons treated last year, and that's pretty consistent with our historical averages. As I mentioned, Fairfax contributed 47%. We'll true up with them here shortly. And in terms of the operating budget, a lot of the same trends that we've talked about in the past few months. I mean, overall, we're making it work. We ended with an annual spend rate of 90% of the operating budget. So we didn't go over, but it's because there's certain areas like chemicals that are increasing much more dramatically than even the high inflation figures, other areas where it's balancing out a bit. So you did see, you can see in the income statement some of the individual line items like utilities and chemicals and some of those things, and see how they changed year over year. And chemicals, we definitely took a big hit last year and will again this year. The energy dynamic is interesting. We are seeing that increase in a lot of areas, but last year if you compare fiscal 21 to fiscal 22, you're gonna actually see a decline. And that's related to a natural gas contract that we negotiated with a third party that took that cost down. So that may seem counterintuitive that utilities went down year over year, but that is why.
It's not just because this is a solar power.
No, it is not.
I have a quick question. You mentioned that demand went up, so we had more water to treat. Let's forget about inflation for a second. When we treat more water, does it cost more, or are there efficiencies in it? Is it actual revenue, or does it all just sort of balance out?
That's a good question. I mean, certainly there's fixed cost like personnel, but utilities and chemicals are quite variable and quite attached to that. So we see it even with the weather patterns. So
Sure.
A little bit of both, but I would say it's pretty sensitive to that. Let's see, moving on to sort of the longer term planning and capital work. We funded $114 million in capital work last year. So, I mean, a lot of that was obviously AlexRenew, but there are also a lot of ongoing projects, such as our pack blower project and various IT upgrades that are ongoing. You might also recall that we have a financial policy requirement to fund 15% of the CIP with cash, and we did do that. We drew on the Series 2021 bonds and about to the tune of $86 million to fund AlexRenew construction. And we have not yet drawn on the $321 million WIFIA loan. And you can see there that both of those are very long-term facilities with attractive interest rates, 135 on the state money and 188 on the federal WIFIA money. So we're really just very fortunate, not only that we lock them in early, but that WIFIA has the flexibility for us to have done that, even though we haven't drawn and may not for another year or two. So having that kind of hedge in place is wonderful given where interest rates have gone. Got the line of credit, and then again, this year we finalized the second $25 million CSO grant, and $22 million of that was drawn in this fiscal year to reimburse for tunnel project expenditures, and that's why we had such high cash at the end of the year. And if you look at the right, that's kind of a breakdown of how much was funded from debt, from Fairfax, or from cash on the CIP. In prior years, we've probably funded more with cash, but with AlexRenew of the size that it is, it just kind of makes sense to consolidate the debt funding there and cash fund other projects so that we don't have to subject them to the debt funding requirements. So a little bit of work behind the scenes there, but just nice to have a variety of sources in place to meet these needs. And let's see, we'll just flip through the CAFR. We typically focus on starting on page 14, which is the management's discussion and analysis. I hit a lot of the high points here already, but there's certainly more detail about rates, about the operating budget, some of the investments that were made during that year, such as workforce investments and enhancements to our benefits as we've continued to just focus on labor force and making sure we've got the people here to do the work. The financial statements are pretty straightforward. That page 25 that Mr. Jinks was referring to is a good one to look at. That kind of rolls up the whole budget and gives you a picture of what's happening sort of from top to bottom. And then following the financial statements are a lot of notes about a lot of very technical topics that these folks can tell you all about. Big picture, a lot of those notes relate to pension and OPEB liabilities, which for a lot of localities is a major issue, less so for us, just not that we don't have liabilities there, but just in relation to the size of our overall financial position, you're not nearly as significant as what you see in some of the cities that cause these rules to have to come into play. So a lot of this is just stuff we kind of have to do, but there are a couple of notes that are probably more of interest to folks. There's a nice detailed note about all of our debt and how much was outstanding at the end of the year. There's some investment figures that you might enjoy, Mr. Jinks, and we have a disclosure in here about the AlexRenew contract, just because that one is kind of longer term and very significant to the financial position of the organization. So we have one in there about that. And you can find all the new accounting standards listed there as well, the ones that either came into play this year or are about to come into play. Yeah, overall, it was a great year. We continued to use all of the tools available to us to keep the financial ships sailing steady and deliver the capital work. And just thrilled to have it all ticked in time.
Thank you very much. We appreciate the presentation and answers to our questions. Any further questions? Staff? Anything further? To add what you said, right? Okay, is the practice for the our committee to the recommendation to the board, or which is just we sit and we listen and the action will be at the board level?
The action's at the board level. You'll make a brief report and a recommendation, but we've got 80% of the board here.
We just have to convince Jim.
We don't need a motion tonight.
You don't need a motion. No.
That's
We'll make a motion tomorrow. that's the only business we have.
It is the only business. If you wanted to, the committee could make a motion to accept the report and make a recommendation to the board tomorrow.
That's your motion?
That's my motion.
Okay, I'll second.
Okay,
Unanimous? Okay.
done.
That's-
A short meeting tomorrow.
Yes.
And everybody's working super hard, so they'll appreciate a short board meeting.
Thank you. And then we just have to adjourn the meeting. This meeting.
Any further business?
That's it.
No? Motion to adjourn.
So moved.
Moved. Second, all in favor? Aye.
All done.
Okay, 6:10.
And I would just add, I wanted to wait till we were out of the official meeting. This is Ms. McIntyre's last evening with us. She is moving on. Actually, I would say returning back home. Where she's taken another position and it's all really good for her. Maybe not for us, but good for her. She's set us in a fine path forward. So we have some cupcakes in the room adjacent, and you are welcome to say a few words and talk for the last time.
And I just want to say thank you so much for the opportunity. To Karen's point, my family's in North Carolina, and I've been kind of straddling those two worlds since the pandemic. And it's time to go back home, but I'm actually going to go work for a friendly face. Our rate consultants, Raftelis, are based in Charlotte, and their CFO departed a while back. And so I'm going to go try my hand at running a small consulting firm, which I really don't know how to do, but I'm sure I'll figure it out. But I could not have done it without the experience that I had here. I told Karen 10 out of 10 would work here again. It's just an absolutely tremendous place to learn and grow and develop, and just such a special place, and I will never forget it. And just thank you very much.
Thank you.
Thank you. Thank you. Christine, I've got to say, you've had a transformative effect by any measure. The scale of our financials, how that's grown because of AlexRenew and other things, and how tight the processes have become because of you and your team, just incredible. And, you know, at our heart, we are holding a lot of public money. So the stewardship of that money is the foundation of trust in healthcare. You've done a lot to create that trust.
Well, thank you. I will say too that you know, I sort of put a bow on it, but a lot of the fundamentals that make this place so fiscally strong were put in place a long time ago by people like Karen and some of the professionals that set the financial policies and helped advise on the debt. And so you have a lot of people besides myself who understand how our finances work and have supported the success for a long time. And I don't worry one bit about this place falling apart with me not being here. There are plenty of people that understand and can support, and the fundamentals are there. I'm not a magician, is what I'm trying to say. I just put a bow on it, but it was the organization is in great shape.
But you will be missed.
Thank you.
Thanks again.
Thank you.
And good luck.
Thank you.
But you're all welcome to sugar up before you go home.
Sugar up.
Sugar up for, sugary Christine.
There you go.
Say thank you.
Thank you, Karen.
Thank you.
Well done. Mr. Chairman? Go through. You've got a big committee.
Oh, for investments? Yeah, Sarah, it's Nelson and Leslie.
Okay,
So Sarah's on it. They swore.
No, I'm fine.
Oh,
I
that's
actually got
that's
a
right, I still
flight out of
remember.
Baltimore tonight. Yeah, well, originally,
Is this your
I was
first time?
supposed to speak at one of our state conferences tomorrow in Fort Myers. That got, with Fort Myers being underwater, that got canceled, so I just decided to keep it. I came in Saturday, right? I have a good friend that lives downtown DC, so I came in Saturday, hung out with him and walked around Sunday, so it was good. My daughter's sick, so I gotta stay home with her, so it's a good thing I'm going home with her anyway.
So you can go. Yeah, we probably need to.
Yes, I know.